TV18.
Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me is Shruti Mishra. These are the top headlines from the startup world. TikTok shuts down all its offices in India almost 3 years after being banned. The company has fired the entire staff in India and as many as 40 people were given pink slips. We have taken the decision to close our India remote sales support hub. We greatly appreciate these employees and their impact on our company and will ensure they are supported at this difficult time, a TikTok India spokesperson told CNBC-TV18.
Zomato posts revenues of nearly 1,950 crore rupees in the third quarter and a net loss of nearly 350 crore rupees. The numbers are not comparable as this is the first quarterly earnings after the Blinkit consolidation.
Respite for some digital lenders, the government issues orders for revoking bans on select fintech companies. The IT industry had banned 94 loan apps based on requests from the Home Ministry over allegations of money laundering and links to China.
Alibaba sells its remaining 3.1% stake in Paytm via block deal, marks its exit from India completely. It had earlier sold its investments in Big Basket and Zomato.
Resolve.ai, an AI-powered employee service SaaS platform, gets $11 million in Series A round, led by the SIG Venture Capital with participation from Xfinity Venture Partners. Existing investors, 9 unicorns and Tri-Valley Ventures also participated in the round.
Microsoft-owned GitHub is laying off up to 10% of its workforce and closing all of its offices, including its headquarters in San Francisco. GitHub will now continue its hiring freeze and make a number of other internal changes to protect the short-term health of its business, according to TechCrunch.
Yahoo plans to lay off more than 20% of its total workforce as part of a major restructuring of its ad tech division. The cuts will impact nearly 50% of Yahoo's ad tech employees by the end of this year, including nearly 1,000 employees this week.
Microsoft co-founder Bill Gates believes ChatGPT is as significant as the invention of the internet. In an interview to German business daily Handelsblatt, Gates said, and I quote, "The new programs like ChatGPT will make many office jobs more efficient by helping to write invoices or letters. This will change our world," end of quote.
Those were the headlines that we're tracking for you this evening. Now let's start with a CNBC TV18 exclusive. The Central Drug Standard Control Organization has sent show cause notices to over 20 online pharmacies and platforms seeking a response within 2 days. As per sources, the CDSCO has alleged that pharmacies sell drugs which are not permitted for sale without proper prescription by a registered doctor or medical practitioner. Timsy Jaipuria joins us now with more. Timsy, what are you picking up?
Well, that's right. What sources are telling CNBC TV18 is that the Central Drug Regulatory Authority, under the aegis of Ministry of Health and Family Welfare, has sent over 20 online pharmacies and platforms a show cause notice, which was issued on 8th of February. And this show cause notice actually alleges violations of Section 18C, Rule 62, 64, and 65 of Drugs and Cosmetics Act 1940. These pharmacies have been given time of 2 days to respond immediately or face further action, a strict action without any further notice. Also, the allegations that have been leveled by CDSCO include that the online pharmacies and platforms are selling drugs which are not permitted for sale in retail without proper prescription of registered doctor and medical practitioner. Sales could lead to serious impact on health of the patient. Also, misuse of public health in case of self-medication. The show cause notice has gone to many of these platforms, and some of these include Amazon, Flipkart, Tata 1mg, Healthcart, Practo, Z-Labs, NetMeds, Apollo, etc. Let's see what these companies have to say, because tonight is the deadline to respond to the show cause notice.
All right, Timsy, thanks for those details. Moving on to another exclusive, at what comes as a relief for some digital lenders, the government has issued orders to revoke their ban. Sources have told CNBC TV18 that the IT ministry has sent a list of company names to be removed from the ban list to Google and internet service providers. Ritu Singh joins us now with the details. Ritu, what are your sources telling you?
That's right. We do understand from our sources that the government, or more specifically the Ministry of Electronics and Information Technology, has started issuing orders revoking the ban on certain digital lending companies which were originally featured on the ban list. Now, we have been given to understand that the government has already reached out to Google and to internet service providers, asking them to revoke the ban on certain companies, which includes the like of Kisht and others, which were featured on the list of 94 companies to be banned earlier. Now, this decision comes after a review meeting was held with some of these fintech players. We reported earlier that at least a dozen of them had gone to the government making representations seeking the removal of this ban, and in support they had submitted several documents with the government as well, which included their certificate of registration, their investors, shareholding patterns of their companies, the grievance redressal mechanism, among other documents. And once the government was satisfied of their legitimacy, it has started to issue these orders to Google and to internet service providers to revoke the ban on some of these companies, bringing a huge relief to the startup ecosystem, really.
Absolutely, some relief coming in there. Ritu, many thanks for those details. I'm moving on what's brewing. AI-powered integrated market research platform provider Entropic is on a mission to create a leading emotion AI platform catering to brands across the world. In a bid to cater to global brands and fuel its expansion, the company raised $25 million in a Series B funding round led by Bessemer Venture Partners and SIG Venture Capital. The company plans to utilize these funds to strengthen their team and develop new products. Joining us now on the show to talk about the company's offerings and growth plans is Ranjan Kumar, the founder and CEO of Entropic. Ranjan, thank you so much for joining us on Startup Street. First up, talk to us about what it is that you have on offer. How are you creating value for your consumers?
Sure. Thanks a lot for having me here. So primarily, we are an emotion AI platform that helps brands understand consumer behavior in its most fundamental way, where we have been built out technologies of facial coding, eye tracking, and voice AI. What it does is, using webcam, we track the face expression, understand where exactly user is looking on the screen, and kind of analyze the voice to get a real feedback of what a consumer is liking and disliking. And this subconscious behavioral preference is what we offer to brand, and that's disruptively different than the way consumer research is ever pursued, which is using surveys and focus group discussions. So that's what we're adding to the table for brands here.
Absolutely. So, like you said, you have a patented emotion AI technology. Just to help us understand that better, give us some use cases if you could quickly tell us and simplify it for us.
Sure. So let's say you're a brand and you want to launch a particular ad, and you have a huge spend coming up in IPL where you are looking to launch it. You better want to have an ad that resonates with your audience at a subconscious and emotional level, because that's what connects users. So you want to test it out beforehand, and that's what brands use our products for. So they test out this advertisement over consented panel users, and they get to have insight like 5th second to 12th second is where user attention, engagement, and emotion is high, low.
Right.
Or eye tracking tells you where people are looking at product, or are they looking at content, are they looking at something else. So these are a lot more pinpointed actionables that brand can leverage to make their ads go better and get disproportionate return out of the investment on marketing spends.
Right. And you've raised $25 million in equity and debt. So how do you plan to use the funds? What's on top of the agenda?
Sure. So there are 3 tracks on which we plan our next 15 months. Right. The first one is we are having our early days success in US and Europe today. 70% of our revenue comes from those markets, but we're going to consolidate and double down on these mature markets. So that's one part of the business side growth. The second one is on the product side. While we have Effect Lab, Effect UX, which is all catering to product experience, marketing experience. So we are bringing all that together under one umbrella called as Decode. That's an integrated AI-powered consumer research platform.
Right.
It's first of its kind. And the third one, which is around tech and IP, we are world's largest emotion and behavioral data repository. So we are working towards actually, can you give me an ad and can I tell you that if you improve your emotional engagement by X, then this is the kind of viewership lift you will get. So that's becoming predictive about performance of an ad by improving the emotional quotient of that. So those are the 3 tracks on which across business, product, and tech we are working on.
All right. So the emotional quotient of the ad is what you look at. Talk to us about your revenue model. How do you make money? You've grown 7 times in the last 2 years. So what's the target for this year? What's your road to profitability looking like at this point?
Sure. So we are a very IP-led product organization, and what it allows us is we are operating at 85% gross margin. So operationally, we are profitable all points in time in our last 7 years of existence. I think for us, the growth has been very much led by large brand acquisition, very enterprises approach of working with customers. And next 15 months, we are looking at a 3x growth in terms of our overall top line. And then while we invest and commit in newer markets, it takes about 18 months kind of time to overall get profitable. But operationally, we are profitable at all points in time.
All right, so you're operationally profitable. Now, like you also told us, you're doubling down on the US and Europe markets. Are you looking at other markets? What's the expansion plan? And how big is the India market for you at this point?
Sure. So India market is a huge market. Essentially, it's about 12% of overall $80 billion market. So that's about $7 billion market out there in India, which is around consumer research and the spends that brands make around understanding consumer. And we are looking at a pie of it, which is right now catered by larger agencies. And there are two components of this. One is large brands doing higher spend, but there's a digital first brands, which is very aggressive in terms of its velocity of decision making and really trying to innovate and understand consumer a lot better to become more optimal and more optimized in terms of their ROI on the spend. So I think those are the levers on which we are looking to drive our story in India.
Okay, great. All right, Ranjan, well, we're completely out of time, but thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you. Thanks a lot.
All right, moving on. Early stage venture capital firm Unitas Ventures marks the first close of its opportunity fund at 75 crore rupees. The fund is aimed at growth investing, and Unitas is looking to offer this growth capital to its 39 portfolio companies which received investment from its earlier funds. The VC firm, which has backed startups like Better Place, QMath, Masai, Avigna and Eduvance, is targeting to raise 300 crore rupees as the final close of the opportunity fund later this year. To talk more on this, I'm now joined by Surya Mantha, managing partner of Unitas Ventures. Surya, welcome to Startup Street. Now, you raised close to $40 million in the first close of the Opportunity Fund. What kind of investor interest you saw in this round? Also, what's the target you've set for the final close of this fund and by when?
Thank you for having me. So you're right, we've did the first close of 75 crores yesterday. And the total fund size, the target size is 300 crores, which we hope to achieve by the end of this calendar year. And we're going to be investing this capital into the best performers of our Fund 1 and Fund 2, which is about 8 to 10 companies. The breakout growth companies and the best performers of the universe of 39 companies where we invested out of Funds 1 and Fund 2. That's where we'll be investing, in the top 8 to 10 companies.
All right. Surya, you've also mentioned that the capital will primarily go into your top-performing investee companies. Can you tell us which startups have you identified and what kind of growth have they been clocking?
Sure. So we've already made investments in some of the companies that you mentioned, leaders in job tech, which is Better Place and Avigna, QMath, which is a global math learning company, Eduvance, which is a leader in domestic education finance, and finally, Masai School, which is India's largest 0 to 1 coding academy, online coding academy. So we're using the capital raised in this first close to make investments in these 5 companies. And we have others down on the pike, which we'll also look at as we raise more capital.
All right.
And of course, these companies have been doing incredibly well. Since, I would say, early 2021, they've all clocked over 25% QOQ growth, and they're really at an inflection point in their growth journeys. And I think this is a tremendous opportunity for investors to get into the hockey stick growth phase and co-invest along with some really marquee investors.
Okay, so picking up from what you just said, considering the current macroeconomic condition, how will the capital from this fund fuel their growth, like you said, the hockey stick phase?
Yeah, so this capital is going alongside, it's part of larger rounds where new investors and existing investors have already invested. So the 75 crores that I'm talking about, the individual ticket size is anywhere between 17 and 25 crores. And overall, these 5 companies over the last 7-8 months have raised upwards of $100 million. So they'll be investing in the usual things that startups invest in terms of bolstering their product and their customer acquisition and so on.
Okay. Surya, till now you've invested in fintech, job tech, ed tech, healthcare, enterprise tech firms and more. However, up to 20% of the Opportunity Fund's capital will be earmarked for deals outside of United's existing portfolio. So again, which sectors will you be looking at?
Yes, you're absolutely right. So we have retained the flexibility of investing up to 20% in companies outside of this identified basket of assets, this portfolio of 8 to 10 really best performers from our earlier funds. We, as you can imagine, we sit in the midst of a lot of deal flow, and we see some really interesting companies in their growth phases, Series A, B, and so on. And in particular, we are now seeing some very interesting companies in generative AI and climate technologies. So those are two target sectors that we'll be looking at for deploying that 20% flexibility that we have for this capital.
All right, one final question, Surya. You know, the outcome-oriented education and job tech are at the core of United's investment strategy. There's also a good percentage of companies working in the gig economy space. So how do you define your investment thesis?
Our investment thesis is simple. It's bringing the future of work to Bharat.
Okay.
To the 450 million, 500 million youth that we need to educate and employ. That is India's single biggest opportunity and single biggest challenge over the next decade or two. If we are able to do that, then India becomes a rich country.
Okay.
And that spans, that theme of jobs and education and outcome-oriented education spans multiple sectors. Whether it is agri, construction, gig economy, as you traditionally understand it, white collar, blue collar, gray collar, right? SMEs. And we see fintech as a horizontal enabler. Eduvance, for instance, is an education finance company. We have another company that enables SMEs and retailers with financial products. So jobs, income generation, income growth is at the core of United's investment thesis. And it's all about outcome-oriented education and jobs, more and better jobs.
All right, Surya, we wish you the very best in your mission of bringing the future of work to Bharat. Many thanks once again for joining us on Startup Street.
Thank you so much. My pleasure. Take care.
On that note, it is time for us to head into a short break. But coming up next, we put the spotlight on Ricron Panels, a unique startup which aims to disrupt the multi-billion-dollar building materials industry by converting low-value plastic waste into quality, sustainable materials. Stay tuned.
Welcome back to Startup Street. Time for our special segment, Future Female Forward. Ricron Panels is on a mission to disrupt the multi-billion-dollar building materials industry by replacing outdated building materials like plywood, cement and steel boards with multi-layered plastics to have a positive environment impact. My colleague Aishwarya Anand caught up with Radhika Chaudhary, the co-founder and CFO of Ricron Panels, and began by asking how the startup is converting low-value plastic waste into quality, sustainable materials. Take a look.
Ricron converts hard-to-recycle plastics, and hard-to-recycle plastics are typically not collected because they don't have a dollar value attached to it. So these are the low-value plastics, and we convert them into carbon-negative building materials. So you can use these materials instead of plywood or metal and roofing sheets.
So what is the role that technology is playing into a platform like yours? And also tell me that what was the gap that you saw? What led you to start this business?
The technology that we use, it is mechanical heat and pressure. What is new about this technology is that it does not use any additives. So the end product is completely recyclable. And in fact, we buy it back also at about 10-20% the invoice value. So once you're done using Ricron, you can come back and sell it to us. That is something that plywood does not have. There was one report by the United Nations where they said that if we continue our current consumption lifestyles, we would need resources equivalent to 3 planets to sustain our current lifestyles. And that is something that I'm very passionate about. When it comes to plastic waste, it is a very readily available resource. And till now, we've generated about 9 billion tons of plastic, out of which 7 billion tons is already waste. So it is a huge, huge opportunity for us to tap into that market and create something of value.
All right. Now I also want to understand that what kind of materials are you manufacturing from the plastic waste, and which sectors do you cater to?
We manufacture building materials. So these building materials are used as a 100% substitute to plywood and cement and metal roofing sheets. The sectors that we cater to are affordable housing. So you can make an entire house from Ricron, from the walls to flooring to furniture to the roofing. The entire house can be made from Ricron. It can be used as school benches.
Can you take me through on a daily basis how much waste are you handling in a single day, and also take us through some of the partnerships that you have?
Sure. So we started about 50 tons a month, and now we're about 700 tons a month, and we're aiming to go about 100,000 tons per annum in about 2 years, and we are dealing with municipalities where we procure post-consumer waste directly from them. We deal with waste aggregators, kabadiwalas, rag pickers, and we even deal with community waste, and even we pick up from manufacturing industries their waste.
What is the business model that you have? And tell me, what kind of revenue has Ricron clocked till now, and what have been some of the challenges in scaling up the business?
Ricron has till now recycled about 10 million kgs of plastic waste, and the business model that we have tackles two issues. One is of the generation of plastic waste, where currently the system is very unorganized market, and the second the problem it solves is that of housing. We're doing about 700 tons a month, and it on an average sells for about 50 rupees a kilo. So yeah, and we plan to set up about 2,000 tons per month facility in the coming 4 months.
Okay.
Yeah.
All right. Now, Ricron has also been a part of private equity fund, Circulate Capital's Ocean Fund, right? So I want to understand from you, how much funds have you raised till now, and are you planning to raise more capital?
Yes, we raised pre-Series A round of funding from Circulate Capital in December 2020, and we're going for another round in about a year, and we're looking at a Series A round of funding for geographical expansion and marketing.
It is Friday, and it's time to see how the startup space fared in terms of new deals this week. 17 deals took place, valued at $207 million as per data from Venture Intelligence. Some of the notable deals include customer experience automation enabler Usher, which bagged $50 million from Iron Pillar, 8VC, Aflac Ventures, and others. Data observability platform Axel Data also raised $50 million from March Capital and others. EV fleet operator Zip Electric got $25 million from IAN Fund and others. That's not all. AI startup Entropic raised $25 million from the likes of Bessemer Venture Partners, Trifecta Capital, and Ulterior Capital. And commercial EV platform Turno bagged $13.8 million from B Capital Group, Kona Capital, Stellaris Venture Partners, and others. Overall, the startup world has seen over 93 deals in 2023 so far, valued at nearly $850 million.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.
Bali, here I come.